All right, let's jump right in because the ticker, well, it doesn't stop for the weekend. And believe me, neither do the stakes. We are smack in the middle of the 0 hour for this Sunday's storage deadline, and the tape, it is screaming that the smart money is heading for the bunkers. Let's break down exactly what that means for you.
And that right there is the absolute ground truth of this situation. Look, this isn't about trying to predict the future, it's about reacting to what's happening right now. By the time that bell rings on Monday morning, this whole game may already be over. Proactive risk management isn't just a suggestion right now, it's the only thing that matters.
So let's take a look at the Sunday tape. On the surface, things might seem pretty calm, maybe even bullish, but when we really dig into the numbers, especially in the energy and digital pits, well, the cracks are already starting to show.
Okay, here's the morning ledger. The S&P 500 closed Friday at a record high, right? Capping a 4-week win streak. But just look at the divergence here. Brent crude is absolutely ripping, settling over $105 as the market prices in a full-blown blockade. Meanwhile, Bitcoin is dipping on these geopolitical jitters, sliding after reports that key diplomatic channels were cut. You see? The equity markets are kind of holding their breath, but the rest of the market is already gasping for air.
And these two charts, wow, they show the disconnect perfectly. On the left, you've got the S&P 500, just pinned at a record high. But on the right, you have Brent crude, what I'd call the truth teller in this whole story, and it is exploding higher. The equity market is trading on hope, plain and simple. But the energy market, it's trading on the reality of warships in the Strait. And let me tell you, that gap is completely unsustainable.
So let's get into the technicals. The key levels here are crystal clear. Your primary support, that blue line you see on the chart, that's the 50-day EMA, down at 6,789. But the ultimate floor, the real danger zone, is the 200-day SMA, way down at 6,705. We are trading nearly 7% above that floor right now. Historically, that's a zone where a sharp, painful reversion back to the average becomes a really high probability event. It's like a vacuum just waiting to be filled.
Now, if the price action itself isn't enough to make you nervous, there is a specific indicator on the dashboard that is flashing bright red. This is the market's internal warning lights, and you need to pay attention to it.
So for anyone who might be unfamiliar, the CCI, or Commodity Channel Index, is what we call a momentum oscillator. What does that mean in simple terms? It basically tells you when a stock or an index has run too far, too fast, and is statistically just exhausted. Either it's overbought on the high side or oversold on the low side.
And where are we right now? The 20-period CCI is printing above plus 140. Folks, this isn't just overbought. This is extreme overbought territory. It's a huge sign that the peace dividend bulls are completely running out of gas.
Just look at the lower pane on this chart. You can see that CCI indicator is just pinned at that extreme high. It's a textbook warning. But here's the crucial point. If that CCI crosses back under the 100 level in the Sunday overnight session, the trap is set, and it's set for the longs.
Okay, let's pivot now to the fundamental driver behind all of this tension. Because the most important indicator right now isn't an interest rate, it's a pressure gauge on an oil storage tank somewhere in the Persian Gulf.
We are in what we call a red folder window. First, today is the deadline. Intelligence is confirming that Iranian oil storage at Karg Island is physically full. That means by tonight, they are forced to shut in their wells, a move that could cause permanent damage to their supply. Second, daily tanker transits through the strait have already dropped. This isn't some threat of a blockade. This is a blockade happening in real time. And finally, Monday's manufacturing data could be the final nail in the coffin for that whole soft landing story if it buckles under $100 oil.
And here's how we got to the brink, step by step. The president's ceasefire extension, it was met not with signatures, but with gunboat diplomacy. Tehran then escalated, using its Mosquito fleet to counter the U.S. Navy. And tonight, that storage deadline hits, which forces a confrontation. And that leads to the final card on the table, the power plant ultimatum. If the strait remains restricted, the U.S. is prepared to decapitate Iran's domestic power grid.
And that's the bottom line. This is the 0 hour. The window for any kind of diplomatic solution is closing as we speak. So, this leaves us with a stark binary outcome for the Sunday Open. There are two very distinct paths forward from here, and absolutely no middle ground. So the bear case is simple. This record high is a Hormuz mirage built entirely on false hope. If those wells are shut in or the grid gets hit tonight, that regression back to the 50-day EMA floor at 67.89 is going to be violent. Now the bull case? Well, they believe the ultimatum is going to force a total Iranian surrender before the open. If a deal is struck, the algorithms will squeeze the S&P up towards 7,200 before you've even had your first cup of coffee. It is a 1,000-point coin flip.
So, how in the world do you trade this? Well, when warships are active and storage tanks are full, capital preservation is the only trade that pays. Here's the plan.
First, you have to respect that 6,800 level. Your 50-day EMA is the line in the sand. If we lose it, just get out of the way. Second, you've got to watch that CCI like a hawk. If it drops under 100 tonight, upside momentum is officially dead. And third, and this is the most important one, do not carry unhedged long exposure into the Monday open. The risk is simply not worth the potential reward.
Remember this. Keep your position sizes small, keep your stops tight, and please, be skeptical of the headlines. Don't believe in peace until you physically see the tankers moving freely without escorts. The tape doesn't lie, but headlines, they sure can.
Whatever happens this weekend is going to set the tone for the next several weeks and quite possibly the next 1,000 points on the index. So the only question left is, are you prepared? Stay disciplined and watch those averages. That's all for now. The ledger is closed.